we picked Worley as the stock of the day. Remember that Worley had downgraded its FY26 earnings forecast in June because of the Middle East conflict delaying and cancelling future projects. But today, the company announcing that it signed a 5-year project management consultancy agreement with Saudi Aramco. The contract is part of a pool of 11 contractors and will support Aramco's capital program across energy, chemicals, and resources in Saudi. Worley will provide engineering, design, procurement support, and construction management services. Now, the agreement requires Worley to use digital capabilities, including AI and digital twins. So just tying that in with the broader conversation as well. Shares are up by about 2%. I guess the question is, we're hearing about the Middle East conflict coming to some sort of a conclusion. Could this be a turning point for Worley, considering they have won, a contract in the Middle East?
I think the Middle East conflict coming to an end is a story we've heard every year for about 100 years now, right? But I think in general, the question is on Worley. And I think Worley is a very wonderful Australian success story. It's one of the largest engineering consultancies in the world. Today, it does about 11 billion in sales and 400 million in profits. So it's a very large, stable organisation in that sense. Over the last 10 years, it's been able to grow earnings at an average of 13% per annum, with the kind of stability, though, that you would expect from commodity exposure and in the EPCM game. In other words, when there's good contracts, margins rise. When there's poor contracts or the commodity boom is lowering, prices fall. So as a result, it wouldn't meet the requirements for us at Teaminvest around stability that we would be interested in to make it one of the top, say, 25 companies on the ASX that you can own. But it certainly is one of the best engineering consulting companies in the world. It's got meaningful scale and it's currently on a PE of 15. So from that point of view, if you like the space and you're not interested in only owning the best 20 companies, maybe you want to own 50 or 60 in your portfolio, then I think Worley does look interesting. And I think the fears of the Middle East are always overblown when it comes to business. But I'll put a hold on it on the basis that it wouldn't meet our criteria for us and our members at Teaminvest.
Okay, Worley has long been talked about, in this transition to renewables, that it's got a foothold there, that it will be able to service that sort of rising trend. Do you like the fact that it's cheap?
Yeah, well, I mean, obviously, it's very cheap as it stands at the moment. They are, I think they're probably the biggest company that no one ever really recognises in Australia. The amount of employees they've got globally is quite astounding. And look, obviously, they've still got a lot of oil and gas projects, etc. The push to renewables, I think, is over 50% now, and they're much higher margin projects as well. Globally, you've got, with the just broader power demand, you're going to have people want to do infrastructure projects. Like, for instance, I think Elon's putting in his own natural gas pipe, etc., etc. Like these hyperscalers have got budgets that are bigger than 99% of governments. So, they're very much positioned to be able to do these sorts of things at scale. Getting a Saudi Aramco, they're one of the bigger companies in the world outside of the mega caps. And look, I think they're positioned well. However, it's a really because they're so big, there's so many contracts, it's very hard to read. That said, down here at the moment, we've fallen into the trap before, 2 or 3 years ago, trying to buy with momentum in this stock around the $13 mark. I think I think at some stage it will bust through, and it will probably go to $20 at some juncture, and there'll be a bit of clarity. But as you can sort of see there on the 5-year, it's been really range bound. But the company's done a lot of great work in terms of preparing themselves for energy transitions. They're in a box seat to be involved in data center projects and things as well. I think this is probably really good value down here, as you can see from a technical standpoint. There's towards the bottom of the range, but you probably want to take it on a long-term timeline though, and I'd say probably just dollar cost average. I don't think there's any rush. You probably want to see another earnings, maybe 2 earnings, and then. But I think they've stopped even announcing their margins and things like that because a while ago, because they just got these negative share effects. Because they've got so many things going on, it's a really hard one to read. So I think they'll gain momentum over the coming years. So I think, it's worth. I know you don't like nibbles, but probably like a small buy and then and then probably just add to it with earnings growth or positive earnings over the course of the next year or so, because I think long term it goes much higher.
All right, so that's pretty positive for Worley.